Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 5 o'clock in New York on Monday, 6th day of October 2025, and this is the Daily Report for Gold and Silver. Another historical day for the precious metals, with gold pushing within striking distance of $4,000. Today, the most active December contract finished up 1.87% and is currently fixed at $3,985.10 per ounce. The new all-time record high for gold is the result of continued safe haven demand by investors as they react to geopolitical risks, as well as bullish market sentiment based on additional rate cuts by the Federal Reserve this year. The move in gold has been nothing short of spectacular, especially when you compress the element of time and look at the parabolic move that really began with gold at around $1,600 up to current pricing, quickly approaching $4,000 per troy ounce. As I've talked about over this last month, it seems quite plausible to me, or it did, that gold would challenge and take out $4,000 up to about $4,100 by the end of the year. However, given the speed and accelerated pace in which gold has climbed, it seemed quite likely that my current year-end targets will probably be challenged or reached by the second week of October. I've converted our daily chart to a weekly chart and also changed it from standard Japanese candlesticks to a Japanese average chart called a Heikin-Ashi. A Heikin-Ashi differs from a candlestick chart in one aspect: the opening price is derived from the midpoint of the prior candle. As you can see, since Tuesday, September the 2nd, Labor Day, we have had extremely large candles, and most importantly, these candles did not have any lower wicks. The absence of lower wicks says that at no point during the time cycle, at no point during the week, did prices go to or below the midpoint of the prior candle. In other words, momentum and strength of trend is extremely strong. Until we see a change in that, as we did here, where you had very large candles and then the following week it was a doji candle, or as you had here, in which you had green candles, although they weren't that large, going from color green to color red, until we get that pivot candle, either a green or red doji or a red candle, there is no technical indication that this trend has been slowing down. Picking a potential top doesn't make sense until we see the Federal Reserve move from a position of more quantitative easing and a more accommodative monetary policy to the reverse. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.